Good morning, everyone. It's Friday. So it's time for the Friday Financial Review. I'm Paul Griffiths, Financial Planner for Europe. So I've been away for a couple of weeks, family holiday, time to switch off a little bit, come back all refreshed and full of knowledge. Hopefully, I'll be sharing that knowledge with you, and hopefully you will be enjoy watching and listening to it, of course. So today is a little bit different. We are doing a crypto edition of the Friday Financial Review. No, I won't be talking about which is the hot crypto to buy, what to avoid, none of that, because I'm certainly not a crypto expert. But as a financial planner, I'm here to tell you what to watch out for when buying and selling crypto from a point of view of tax. Yes, the dreaded tax. As you know, crypto, decentralized digital asset, does it exist? Doesn't it exist? I'm on the side of a bit of both, really. It is there in virtual space, as we know. Many corporations are using it as legal tender. And of course, we have seen a number of countries already in Central and South America adopting Bitcoin as an official legal tender for the country. Today, we are just going to concentrate on Spain, when it comes to taxation regarding cryptocurrency. Many governments around the world have taken a lot of time to try and legislate not the currency itself, but how people are trading in these cryptos and what sort of taxation should be imposed. So many of us who do buy crypto, and I'm certainly one of those who trade a small part of my savings in crypto, I use exchanges. So these are basically equivalent to your trading platforms if you're buying and selling stocks. So the exchanges like Coinbase, Binance. Binance is the largest exchange in the world by volume, whereas Coinbase is the only publicly listed exchange, so perhaps gives you a bit of added security being a publicly traded company. Now, these exchanges have taken a lot of data information from their users: where you live, what's your tax ID number, so on and so on and so on, which obviously leads us to believe that they are getting prepared for various governments around the world where they have clients, to ensure that when those governments bring in various legislation, they are already compliant and thus sharing your trading information potentially. We live in a world where financials are interconnected and constantly being shared. So, Spain has taken time to draft various legislation. I believe the tax office themselves released their final draft at the very end of 2018, and even then it wasn't really being worked on properly by various accountants and whatnot. But although I'm going to say that we now have a clear line of sight, I do believe this has been enforced probably for a year or two at least. As a resident of Spain, if you are trading in cryptocurrencies, and what I mean by trading is if you are buying and selling. So no different if you're buying or selling stocks. So if you are buying and selling stocks and you are realizing gains, then the things you've got to watch out for is you need to know what the euro equivalent value at the time of purchase, and then the euro equivalent value at the time of disposal. And it is the Spanish investment income / capital gains tax rates that would apply. So in this case, to remind you all, those rates start from 19% and they go all the way up to 26%. First €6,000 gain, 19%, up to 50,000, 21%, above that 23%, up to 200,000, and then anything above that is 26%. So relatively straightforward. It's treated the same as, if you're getting dividends from a Royal Dutch Shell share, for example, if you're selling a Fidelity Global Technology fund and realize a gain, you're going to pay the investment income / capital gains tax. Okay? So that's trading in cryptocurrencies. However, if you are a business and you are accepting cryptocurrencies as tender for the exchange of your services and goods, well, ladies and gentlemen, that flow of income coming in will result in not capital gains when you see your crypto rise in value. It's actually then considered as income. Okay? Therefore, the income tax rates apply. So, for those running businesses which are domiciled in Spain, do be very, very careful if you are accepting cryptocurrencies as a form of legal tender in exchange for your goods and services, because a different taxation regime will apply. And it's all well and good, your crypto is going up and up and up, but if it's going up significantly, well, we all know the top rate tax in Spain, don't we? Almost 50%. So just watch out for that. Okay. So yes, I will be doing a little bit more on various bits and pieces on crypto taxes in the various jurisdictions around Europe over the coming weeks. Next week, we're going to move on to what I like to call comparisons. So we're going to be talking about what's the difference between a SIP and a QROPS. What's the difference between a simple trading platform account to an offshore bond or a European bond, okay? To give you guys the pros and cons on both sides, so you, my followers, will know exactly what to look out for, and through the advice of a regulated advisor, you'll be able to put together a suitable financial plan. Thank you all for watching, and thank you very much for following my video, whether it's through YouTube, Facebook, LinkedIn, and the various platforms that I use. Do share these videos to any of your friends, colleagues, and loved ones who you feel might benefit and learn something from watching these videos. And yes, it is Friday, and another day, another dollar. But of course, tomorrow's the weekend. I myself will be taking a bit of time off tomorrow, not working, and then enjoy the Grand Prix weekend. Hope you do too. Have a lovely one, and I'll see you all next week. Ciao, ciao.